tokenization will strip away a huge amount of unfairness from the system by increasing asset access worldwide. So very interesting commentary here from Brian Armstrong, talking about like expanding the global assets and access, and that occurs on chain with these public networks that are accessible to anyone around the world. But what is really occurring with assets on chain right now? So I couldn't find anyone on Twitter that had posted about it, so I just posted it myself. I posted a little update about what tokenization looks like in March of 2026. And you can see the chart here, but I'll describe in depth for you. So ARK Invest and RWA.xyz is saying that between $22 and $27 billion of real-world assets are tokenized on chain right now, and that is distributed. And there is a difference when we talk about tokenized assets. There is the represented value of tokenized real-world assets, and then there is the distributed value. The distributed value is access that on-chain investors have to a token, like a money market fund, like any other tokenized real-world asset that occurs on chain. And so when we talk about represented value, though, you can see quickly right there in my tweet, I said 326 billion is represented on chains right now, on public chains right now. And this is kind of maybe confusing when you hear about Canton talking about, oh, we have $6 trillion worth of real-world asset tokenized on our network. This isn't shown here. Why is that? And so not everything RWA.xyz is showing for every public blockchain out there. But this is generally what, because this is the go-to spot when it comes to tokenized real-world assets. This is the only one that's accounting for the most amount of blockchains out there. So this is the number we kind of have to go with at this point, all right? Maybe in the future we'll have more access to data, but this is we have to go off of. 326 billion in represented value, and then we have 26 billion in distributed value, okay? And so now that we know where we're at, what is kind of the future looking at like for tokenized real-world assets? Well, ARK Invest says $11 trillion of tokenized real-world assets by 2030. So we're gonna have to see some big changes here if you wanna be able to compete with that number by 2030. But if we're going down the list here, so this is distributed value, this is access investors have on these public blockchains right now. The top is Ethereum. You can see their market share is 57%. So 57% of all distributed tokenized real-world assets are available on the Ethereum network. And we can go down to BNB Chain, Liquid Network, Solana, Stellar, Arbitrum, Avalanche, XRP Ledger, Polygon, Plume. That's in order of what is the top most to the least that we have available right here. And I think that kind of just gives us a good backdrop when discussing this, because we're going to be talking about XRP in the show right now. And so this kind of, you know, if we're looking at this, it's like, well, XRP is fairly down the list here, all right? What's the value proposition? What do people talk about with XRP? Cross-border, bridge currency, Ripple Labs, the company using an XRP. When it comes to tokenization, though, we're not really seeing that market impact. We're not seeing a real market share there. It's pretty low. The other thing I want to get into, Matt, is there anything you wanted to say on that before we start talking about David Schwartz and the bigger tokenized commentary we want to give for this show?
Yeah, so at the beginning, we talked a bit about the comment from Brian Armstrong in regards to making it less unfair, right, or restoring fairness to the market with tokenization. One big takeaway that I think that this maybe isn't completely accurate with is that, one, tokenization brings more liquidity to the markets through and through 100%. It also makes things more efficient, allows us to tuck those tokenized assets into smart contracts more easily. If anything, it increases liquidity, but it does not automatically immediately lower the barrier of entry for certain tokenized assets, right? Just because something's tokenized doesn't make you all of a sudden an accredited investor or a qualified purchaser. So we still need reframing, right? We need reframing within, the legal definitions from SEC, CFTC, other governing bodies that determine who is allowed to purchase these types of things. And maybe as things become more fractionalized, it does make things easier for us to allow, say, okay, this type of person doesn't need to be an accredited investor. This person only has to make $50,000 a year, $80,000 a year. But those are definitions that don't automatically get created because of tokenization within itself. However, you look at a lot of those networks that are providing a lot of the tokenization, Ethereum, like you mentioned, being the largest one. Ethereum's been pumping out smart contracts and NFT products, or having a continued growth in those types of products for quite a large amount of time. If you think about XRP, XLS20 only went live a few years ago, which is the ability to mint NFTs natively and create those objects natively on the XRP Ledger. So Ethereum is a huge head start. So I have zero surprise to me that Ethereum has such a large market share here. You've seen Solana climb up the ranks here, and because Solana is vastly more efficient than Ethereum, you look at TPS, time to finality, overall cost to create objects, Solana is running laps around Ethereum right now. And if they get their scalability under order, they could start overtaking Ethereum. So, there's going to be a lot more things that we start to see come online as RWA. We know that when the gold and silver trades were really going crazy, we saw a lot of that volume pick up dramatically, as they were kind of more of a novelty before. Now they're a real instrument that people want to use in tokenized format, because you can also take those contracts, collateralize them, do other things with them. Now, like we're seeing with the oil market going crazy right now, we're seeing those WTI contracts pick up very dramatically in an on-chain capacity. We had never seen that before. So it is going to be a slow boogie. And as you start to see the market start to have further interest in there, we'll refine those products. More chains will offer those types of products. But good news is we're really early to a lot of this stuff.